Hello, and welcome to another episode of the Market Snapshot series. Thank you for joining the session. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we'll be looking at what's currently happening around the world of financial markets. We'll also be trying to understand the key price levels that have been formed recently, key trends and market structures, as well as what to expect for the rest of the day. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. All right, let's get started by focusing on the key events in the economic calendar. So clearly, since this morning, we have had quite a number of data points. Just a moment. So one of them is the ANZ Business Confidence Survey, which came in better than expected for New Zealand. Then we had Australian retail sales, which came in weaker than expected. Then German CPI as well as Spanish CPI. So for Spanish CPI, there was a big jump from the previous reading of 2.6% to the current reading of 3.5%, which came in as expected. So at 11 a.m., just about 2 minutes ago, we had the ECB economic bulletin released. I will be looking to get that link so that you can peruse it on your own free time. So the economic bulletin presents the economic and monetary information, which forms the basis for the governing council's policy decisions. It's released 8 times a year, 2 weeks after each monetary policy meeting. So in simple terms, we are referring to what we call the ECB meeting minutes. So the latest issue was just released. So for your time, you can go through it. So key highlight of the summary is that inflation continues to decline, but it is still expected to remain too high for too long. The Governing Council is determined to ensure that inflation returns to its 2% medium-term target in a timely manner. It therefore decided at its policy meeting on 27th July 2023 to raise the key ECB interest rates by 25 basis points, which was the decision on the last ECB meeting. So the rate increase reflects the Governing Council's assessment of the inflation outlook, the dynamics of underlying the developments since its meeting on 15 June support the expectation that inflation will drop further over the remainder of 2023, but will stay above the target for an extended period. While some measures show signs of easing, underlying inflation remains high overall. The past rate increases continue to be transmitted forcefully. Financing conditions have tightened again and are increasingly dampening demand, which is an important factor in bringing inflation back to target. So from the last speech early this week from ECB President Christine Lagarde, she mentioned that inflation in the Eurozone is expected to remain longer than expected. And however, when you do a comparative analysis with other currencies, we know that other central banks are also tightening further, higher for longer. It's the same case for the US Federal Reserve, and of course, for the UK Bank of England, for Canada, Bank of Canada is also doing the same. So you tend to find that all these currencies are kind of strengthening because of tight monetary policy. But the one that is most aggressive gets all the strength. So that's why we are seeing the dollar dominating other currencies. So it basically creates what we call a carry trade, where investors are able to borrow money from areas that have low interest rates and invest that money in areas that have high interest rates. And so far, we are seeing US basically means that our funds are going in one direction. So, hello, Beauty. There is Leonard and Steven. Hello, Kazadi and Philip. I can see J-Dog, Peter Samuel, Paul Karanja, Genius Muitu, Jags, Richie, and Kenyaga. Thank you, guys. When does Tokyo, London, and New York sessions start? How do you do, Rufas Kamau? I'm being smacked by the market. I'm here for some healing intervention. All right, we'll be looking at some key potential trading opportunities. And of course, to answer your question, Kenyaga, there's a very nice tool on babypips, babypips.com, and basically shows you the market sessions. So all you have to do is to visit the site, go to tools on their website, and then select Forex market hours. So from here, you're able to visualize all our trading sessions. So make sure that you're looking at GMT +3, and once you set the right setting, then you'll see the sessions in Kenyan time. So here we have the Sydney session, we have the Tokyo session, the London session, and of course the New York session, and you can visualize the overlaps. So right now, we are currently in 2 sessions. One is Tokyo and the other one is London session. So just so you get it. Oh, sorry for that. So just go to babypips.com. So we get back to the economic calendar and see what else we're expecting for the day. So for the ECB meeting minutes, I'll be sharing them on the live comment section. So when you have some time, you'll be able to go through that. So back to the economic calendar, and later on in the day, we'll be getting the Italian 10-year bond auction. Then the most important news for the day will be happening at 3:30 p.m. So at this point in time, we'll be looking at the final GDP quarter over quarter for the US, weekly unemployment claims, and of course, the final GDP price index quarter over quarter. All the data points will be released at exactly 3:30 p.m. and these could bring some US equity indices. So later on, we'll be having a speech by FOMC member Goolsbee, and this will be happening at 4 p.m. Then pending home sales data month over month at 5 p.m. Natural gas storage data at 5:30 p.m. And then FOMC member Cook will be presenting a speech at 8 p.m. So we will also be getting a speech from Federal Reserve Bank Chair, that's Jerome Powell, and this will be happening at 11 p.m. So he's due to speak at a town hall event with educators hosted by the Federal Reserve in Washington, D.C. And of course, this could bring some much needed fireworks. So, well, the most important data point for the day remains the final GDP quarter over quarter and unemployment claims at 3:30 p.m. It's also important to follow up on the speech presented by the Fed Chair Powell at exactly 11 p.m. So those are the key highlights for the day. We don't have much. And of course, as we head into tomorrow, we'll be looking at PM, Japanese unemployment rate, preliminary industrial production month over month, and of course, retail sales for Japan. So there will be a bank holiday in China. We'll be getting a speech from ECB President Lagarde. And later on, we'll be looking at the Fed's favorite inflation measure, which is the OPC price index, personal consumption expenditures. We will be looking at good trade balance, personal income, personal spending, and preliminary wholesale inventories for the US. So yes, tomorrow there will be some high volatility, especially coming from the inflation data. And for the Eurozone, we'll be looking at the CPI flash estimate, or basically an estimate of the inflation rate in the Eurozone. So this will be happening at midday. So of course, tomorrow we'll be having another snapshot presented by Samson Mzera. So make sure to join at exactly the same time, which is 11 a.m. So let's get through with this and check key price levels. So I'm sure that everyone is wondering what's currently happening in the markets. The markets have been quite unreasonable lately because of overextended trends. And that can be quite worrying for someone who is very new to the markets. But if you experience, then you know that that presents opportunity. So for UK 100 index, traded sideways for quite a period of time, about a week and a couple of days. Then it broke towards the lower side, kept retesting this area here, and eventually we found our resistance and the market accelerated downwards. So this is a book kind of reversal where the market retests a certain resistance line, keeps retesting, and once it fails, you see the market moving in the opposite direction. So in this case, it played out nicely, and now we are seeing the reversal happening for the FTSE 100 index. So as for the dollar index, it remains pretty strong. It has been on an 11-week rally, meaning that for the last 11 weeks, it has closed higher than it opened each week. So with this 11-week rally, we have seen other currencies taking the blunt as the dollar strengthens against them. So one of them is the pound USD, which has been extremely bearish. And from the forward chart, you can see we didn't even have pullbacks on the last 2 weeks. It's just the market pushing down and down and down. And if you look at the daily chart, it's very clear that this was a very strong momentum. And this is almost the third month we are seeing consecutive pushes further back downwards. So at some point, we will be expecting to see some form of support happening in these charts. And that support will present an opportunity to trade back upwards. However, for now, sentiment remains the same. The dollar index remains pretty strong, and we expect this particular trend to continue moving downwards. So when we see some kind of pullbacks, like what's happening with pound USD right now, it only represents some opportunity to go short again as we continue enjoying the strong bearish trend. So unless something changes fundamentally, there remains overall consensus that investors are betting on a much stronger dollar. So as for our USD JPY target, we saw the breakout here happening on Monday. Then on Tuesday, we get pushing higher, on Wednesday even higher, and today we have a much needed pullback. So whenever you see such kind of pullback, it represents an opportunity to trade in the direction of the trend. So we are still very bullish on USD JPY. I expect some further upside on USD JPY as we run towards our target. So remember, our target is all the way up at 151.916, which was the previous high last year. So yes, we know that the Bank of Japan and the Ministry of Finance in Japan have all been threatening to make some form of intervention. So the last currency intervention happened here last year, and this was around October 20th. So we're almost completing a whole year, and the market is getting back to the same level because monetary policy has not changed. So even though the Bank of Japan is threatening to intervene in the currency market, they have not done so yet, so which basically leads to the assumption that the current prevailing trend will continue. So there is a high likelihood that we will be seeing the market continuing to push higher. So USD JPY seems ripe for some further upside. And of course, very short-term target is yesterday's high, but a longer-term target is all the way up at 151.916. So Euro USD seems to be pulling back downwards after breaking the lower trend line on this channel, which basically implies an overextended bearish momentum. So while the market is attempting to pull back, this could be a retest of this trend line. And then see some further downside momentum. So the momentum pullback in the dollar index here is what is causing this bounce happening in pound USD as well as trends and keep going up. Then I expect the Euro USD to keep pushing further downwards, and the same case for pound USD. So for USD CAD, we remain within the same pattern. There was an attempt to break here, failed. The market went back to the lower trend line, and now we are going back up. We don't have a breakout yet. So in this case, we can say that we have a pattern, yes, but the market has not made a significant breakout. So from our trend line that we have been monitoring here for quite a period of time now, I think in the last 2 weeks, we have been monitoring this support line here. Then the resistance line is now clear. It's no longer a horizontal, but rather this line here, which implies a formation of a rising wedge. So in an eventual breakout, which would present a nice trading opportunity. So as much as the US dollar is gaining against the Canadian dollar has been pretty strong. You can see the movement here. So oil prices continue strengthening, also potential opportunity that this market could break the water and markets for trends in the CAD pair. So with gold, we know what happened here. This was an off market pricing. With this case, it basically means that you cannot use this for technical. You should not be able to see this. The overall prevailing trend for gold has been bearish, and now we are looking at prices that have not been seen in a long time. So the last time we saw gold price trading at this level here was all the way back to March 13th, early this year. So clearly, it's a very strong momentum that we are experiencing currently in gold. And this is quite worrying, especially for swing traders or trend traders. So with this big or huge momentum downwards, it basically implies that gold could be facing some support around this area here. So we can all see that this area was acting as a major resistance point. So after gold traded higher, now there's this opportunity where the market may be bouncing from this or even breaking below this area here. So from what we are seeing here is a market that is trading looks like a flag. So using a smaller time frame, in this case the 15 minutes chart, then we can all use this to our advantage. So while we know that for this particular period the market is just moving sideways, we know that eventually the market will not stay there. It will have to make a break, and that's where we get our opportunity to either go long or go short, depending on the direction of the break. So in this case, just monitor this consolidation and wait for the market to show you a direction, which would be the breakout outside either of these two trend lines. So all you have to do is to be patient and wait for that to happen, and then you will be able to squeeze in your position. So AUDUSD managed to find support here, but then later on broke towards the lower side, retested the area and kept pushing further downwards. And now we are seeing the market yet retesting another support here. So cruised below that and then bounced strongly. So in this case, we are seeing a market wiping some liquidity all the way down. And now there could be a chance that the market may bounce from this area now. So from the forward chart, you can see the strong rejection that happened here. So if I zoom out, you are able to identify that this was the lowest price some time back, coupled with this and now this. So from this, you can easily tell that the market has found some major support level here. So the first candlestick with a long tail, the spinning top, indicates a rejection of lower prices, and the second candlestick was a confirmation that buyers are entering this market. So now there's a good potential opportunity. The market may now start moving back upwards. So in this case, looking for bullish positions tends to make more sense rather than looking for short selling positions. So on the upper side, this is what we have, a market that is almost horizontal. So I would say the resistance is somewhere along these levels. Just trying to adjust. So these are the sequence of highs, sequence of lows, and now the market is just bouncing off the lower trend line. So for US equity indices, they remain on a bearish momentum. So if you go to the 4-hour chart, this is how it looks like, and the daily chart, this is how it looks like. So we are currently testing a major support level that we saw as the low of last month. So from the 1-hour chart, this is how it looks like. And if I zoom out, then you can see that this was the support level at 14,553. So when the market got to this level here, it found support. Then yesterday, there was a quick break and the market went back to the same level. And now the market may be attempting to break the same level again. So if I clean up my chart and remove everything, then zoom out, then this is the kind of chart we are seeing here. So for the last couple of days, I would say for this week, the sequence of highs have been following this area here. Monday, Tuesday, Wednesday, Thursday, all following this particular resistance. which basically implies that there is a good likelihood that we will be seeing the market retesting yesterday's low and perhaps even cruising lower. So US equity indices remain weak. It's the same thing for the S&P 500, the same thing for the Dow Jones. We still expect to see some further downside. And if you monitor using a shorter time frame, such as the 50 minutes chart, you notice that there's a resistance here, but then the trend line keeps on shifting as the bearish trend continues being stronger. So the market is forming significantly lower highs, which basically implies a stronger bearish trend. So there's still more room for downside for US equity indices. So we identified this support level here on Tuesday, and the market bounced off very well on $90.814 per barrel. So we managed to see a good rally. Our market got to our target here. Remember setting this on Tuesday. So when the market got to 93, closed even higher and went to this previous high here, which was $94.886 per barrel. This was more than we expected. And since getting to this area early this morning, you can see the market pulling back downwards. And now we are retesting the $94.083 per barrel, which was a significantly high here. So it was a major resistance here, and the market is getting to retest $0.525 per barrel. But if the market doesn't close below 94.083, then we'll be expecting a retest of the day's high and perhaps a continuation of the prevailing trend. So investors are already worried that oil prices could be headed for another high, and this could mean oil. Before we get to $100 per barrel, you notice the strong resistance here and here, which is at $97.712 per barrel. So from the 1 hour chart, you can see that the early morning, the highest price we have seen is 95.128. So now if we see a continuation of higher oil prices, then the target remains 97. So 97.712 is the key level target. And if you do a from the previous highs, then you will notice that this is a very, this is the market is very higher than $97.712 per barrel. Is not an overreach. So French equity cash index clearly making a very strong basis for a rejection here and then dropping quite sharply. And now there's that potential that we could be seeing a break of this formation towards the lower side. So clearly there has been some key level support area holding this index, but then the overall prevailing trend is bearish. So while on the shorter term, I would say the last 2 days have been sideways, I expect some further downside momentum based on the overall prevailing trend, which is bearish. So after this strong rejection of higher prices, I expect some further downside for the France 40 index. Euro 50 cash index also expect the same. So market go to the upper trend line, failed to break, and now we are seeing some continuation downwards. So as for Bitcoin, we had a big spike yesterday, market pulled back downwards, and now it's attempting to recover. So there's a good possibility we'll be seeing some further upside happening for the day. So for USD against the Swiss franc, we know there was the SNB meeting minutes as well as a speech from SNB chair Jordan, and this led to some further weakness in the CHF. So as the Swiss franc continues losing, we saw this particular trend continuing to strengthen. But then today we are seeing some form of pullback, and this is quite significant, but also strongly correlated with what's happening with the dollar index. So while we are seeing this last hour and the current hour, the dollar losing to the Swiss franc, I think it's the similar thing with what we are seeing here. So sorry for that. So what the index here is very similar. The last one in the current hour, we are seeing the dollar XE, but at some point I will be expecting the dollar to come back strongly. And as a result of that, we could be seeing those reversals. So apologies, I lost my connection for a moment, but now it's back. I'm hoping that you can hear me clearly now. So let me check on the questions that you guys have raised. So the prospect of higher energy prices and the specter of sticky inflation is here with us. How do you trade on retracements because the highs we are getting are ever getting higher? So in an environment where you have strong prevailing trends, it's way easier to stop fighting the price and trade according to the direction of the price. So whenever there's strong trends in the markets, you want to be a trend follower. And being a trend follower doesn't mean that you buy the tops. It means that you be patient and trade the pullbacks. So whenever there is a pullback in a very strong trend, that's where you are optimal entry point. So we saw this happen with DJPY. So I remember telling you, then we had this on Tuesday. So when we were doing the session, we were having this red candlestick. It was quite convincing, showing that sellers are entering this market. But then I told you guys that whenever you see such a pullback, it's an area where you look for retracement entry. So it's the same thing happening right now on USD, and it's a nice retracement entry where you can potentially target even higher prices because you can already see buyers entering strongly on this market, and there is a strong likelihood that the market will move higher. So you look for those pullbacks and take advantage of them. So another question here. Kindly update and assure the glitch which recently happened won't happen again. I'm in fear of trading. Yeah, I understand your concern. If I told you that the glitch will never happen again, I would be lying because these are computer systems. And as we all know, it happens to every other company. There are times when, let's say, Safaricom systems are not working. There are times when the banking applications are not working. The e-Citizen, KRA, and all kinds of websites, including Google, will, after some time, have a glitch that may affect its users, but they try their level best to make sure that, let's say in a period of a year, you get up to, let's say, 99.99% uptime. So, well, you may get negatively affected, especially when a glitch happens. The broker has the responsibility to indemnify you as the client to make sure that you did not have unfair advantage as a result of the glitch. And there's no single broker that will sit down and facilitate glitch in the markets. So we are always trying to be the best in this highly competitive environment. You know that it's a very competitive financial world, and trust is very important for any broker. So we always try to bring the very best service to our clients, and eventually at some point one of the brokers will always have an issue with their system, but how they handle it is what matters a lot. So if there's ever a glitch in any of the brokers that you're using, then how they handle it is what should matter more to you than whether or not it happened, because computer systems can never be perfect. So also seeing a comment on withdrawals. The withdrawals are back. You should be able to get your withdrawals back. The drop on GU and EU appears like a straight line on the daily time frame. Is this usual? No, it's not very usual to see very strong trends happening in currencies. But then when there's fundamentals indicating a direction in the market, then it makes out of sense to participate in that direction. So if you're looking at pound USD and then you go to the daily, it's a very sharp drop. It also happened here. I remember seeing this happening through the month of July, August, September last year, when the Euro USD hit parity and the pound USD hit the lowest level we have ever seen against the dollar. So the current issue that we are having is that the demand for US treasuries is too high, especially the short-term ones, because investors are assured of good returns on an appreciating dollar, which basically makes it very attractive for institutions and investors. So as a result of that, that's why we are seeing the big sell-off. So for Euro USD, I would say that there is a strong likelihood the market breaks below this support level and cruises even lower. And this pullback is only but good opportunity to start looking for short selling positions. So for me, I would be looking for weakness into this. If the market is attempting to go up, I'm looking for weakness so that I can go for a short selling position. Another good question from Witty. Which prop firm can you recommend to us Kenyan traders? I think we have covered this sufficiently on the Bullish Banter podcast. And of course, to anyone listening to this particular webinar, make sure to go through the latest episode of the Bullish Banter podcast. We did some good justice on the issue of investing in bonds. So prop firms currently in a scandal, especially recent activity with the prop firms where they were doing bad things to their traders. I wouldn't specify which. So right now is not the very best time to get into a prop firm. You'd rather just deposit your money in a broker, trade your own money, and then build bit by bit over time. So last question here, is this a psychology problem? I just view this hiking exercise of the Fed is not getting over. The DXY is strong and these other currencies are being hammered. You sell until you're panicking. Yes, it's affecting other currencies globally. So the Chinese yuan is losing to the dollar, the yen is losing to the dollar, the Kenyan shilling, the South African rand, the Nigerian naira, all these currencies are consistently losing to the dollar. So rather than concerning yourself with the why, concern yourself with what can you make out of it. So as long as there's these strong trends that are unprecedented, they present trading opportunities for you as a trader, and for you just focus on grabbing all those pips available in the markets. All right, guys, thank you for your time. I really appreciate this. And I hope to see you on the next session. Remember, today is Thursday, so we have yet another session coming up at 8 p.m. So 8 p.m. we'll be looking at what we have experienced over the week, the key considerations, key expectations in the markets, and of course, we'll dig deeper in what's currently happening with the US Congress and House of Representatives. and the potential of a US government shutdown by Monday next week. In fact, it's by Sunday this week. So if we get to Sunday and the Congress has not passed various financing bills, then there's a good chance that on Monday the US government will be under a shutdown, and that tends to be quite negative for US equities, but then it could also be very positive for the US dollar. So make sure to join in at 8 p.m. as we cover more details around that.